If one were to do a case study of the SPAC bubble that overwhelmed U.S. financial markets in 2020 and early 2021, few investments would illustrate the mania better than a vehicle known as Churchill Capital IV. Listed on the New York Stock Exchange in September 2020 after a $2.1 billion initial public offering, Churchill quickly became one of the hottest SPACs on the market. From January to mid-February 2021, Churchill rose 550% to a $15 billion market capitalization as novice traders on trading apps like Robinhood fervently bid the shell company to the moon in anticipation of its merger with an electric vehicle startup called Lucid Motors. Then, like so many SPACs, after the bubble was pricked by the Securities and Exchange Commission's scrutiny and a retreat of speculators, Churchill came crashing down to earth, falling by 2/3 in value over the past 3 months. While many investors were likely burned by Churchill's rollercoaster ride, one Wall Street legend appears to have made a haul. Billionaire philanthropist and financier Michael Milken, once known as the street's junk bond king for pioneering the issuance of high-yield bonds to finance leveraged takeovers in the 1980s at Drexel Burnham Lambert, profited from Churchill's ascent. In addition, Forbes has discovered that Milken is a whale among SPAC investors, with exposure to a portfolio of 125 separate SPACs worth no less than $500 million, according to our research. Milken's SPAC holdings come via a Brentwood, California-based investment firm called Silver Rock Financial, which once was his family office. In 2016, Milken seeded Silver Rock's spinout as a private investment firm with several $100 million of his money to get the firm off the ground, the Wall Street Journal reported at the time. Silver Rock has since grown to manage $3.7 billion in assets, assembling a massive SPAC portfolio, to the delight of its original architect. In many respects, SPACs are the perfect financial product for Milken. Beginning in the late 1970s, Milken lorded over Wall Street after he discovered that fallen angel and lower-grade bonds provided enough extra yield to more than compensate for their higher default rates, creating enormous investing opportunities. With that epiphany, Milken turned Drexel Burnham into a low-grade bond factory, issuing debt that supported a generation of financiers from Boone Pickens and Henry Kravis to Carl Icahn, eager to take over stodgy blue-chip companies from RJR Nabisco to Gulf Oil and TWA. In the 1980s, it transformed Drexel from an afterthought investment bank into the epicenter of the financial universe, with Milken's Beverly Hills-based branch providing him income of more than $500 million a year. In 1990, Drexel went belly up as Milken was prosecuted for securities violations by New York Attorney General Rudy Giuliani and pled guilty. He served time in jail and agreed to a lifetime ban from the investment industry.